Gold is super bullish. This is what local expert Chris Dix had to say on the matter, with gold hitting all-time highs twice this week alone, and experts expecting it to break even more in the months to come. But the question beckons for a lot of traders is, why exactly is this happening? Is it due to central bank buying? Is it due to the rate cut? Is it due to geopolitical tensions? Well, we are in a unique position where it is all three at the same time. Gold right now is looking like a sort of Goldilocks hedge for a lot of different factors, and this is driving up the price. We have fear of a recession, or at the very least a hard landing happening in the US, and that is driving the price of gold up. We have central banks selling treasuries and buying physical gold to replace it with, and that's also driving the price of gold up. There's also a fear that the power of the US dollar in general is going to be dipping down with the current easing cycles, more medium to long term, and that is also driving the price of gold up. There's also a shift globally away from the US dollar and more towards gold. Think of what the BRICS nations are doing. So all of this coming together, and also looking at the US dollar's competition, such as the Canadian dollar, the euro, and the Japanese yen, all looking to increase in strength over the next coming weeks, months, and years, we can see that the US dollar is going to be taking some shots, and the era of where the US dollar's economy is looking relatively so much stronger and so much more dominant than the rest of the world is likely coming to a bit of an end, or at least is going to hit a massive roadblock. So with all of those factors coming together all at once, gold has a lot of room to soar. Some experts are even predicting that gold is going to reach $3,000 to $3,500 dollars per ounce in the next 12 to 18 months, with little risk of a major correction. This bad boy is going to stay super bullish for a while. But let's take a step back. Let's look at how we sort of got here in the first place. We've had two separate instances where gold has increased by 15% in a relatively short period of time. The first time was around March, and this was due to what most experts are calling new world drivers. This is things like the central bank's demand coming up, emerging markets like Turkey and their high inflation rates, increasing demand in jewelry in India, and all these fundamental factors and more drove a lot of bullish pressure and led to a large spike in gold earlier in the year. Now, later in the year, now we have more traditional drivers of price. This being led in the forefront by the US dollar's easing cycle and 50 basis point rate cut that they did just a short while ago. And this is likely to continue continue throughout the rest of the year, with two more rate cuts planned before the year's end. So with all of this, gold is looking like it's going to soar up, but there are a few obstacles that gold is going to encounter in its trajectory to that magical $3,000 or $3,500 per ounce mark. Overall, right now, jewelry demand is down, and 50% of the demand for gold is weighted in jewelry. There's also a decrease in demand for gold bars and gold coins overall, and this is largely due to the current price and the current inflation the whole world is in. However, these changes in demand for physical gold do take their time in translating to the price of gold in the actual market. So even though these obstacles exist, it's likely going to be weeks or months before we see that in the actual, see a reflection of that in the actual price of gold on the charts, and before we see any major correction for all the bullish momentum that we've seen thus far. And like I said earlier, with another 25 to 50 basis points left to be cut for the US for the rest of this year, and another 4 rate cuts planned for next year, even if these obstacles do materialize, they are really unlikely to have a major impact on gold's trajectory. We are probably going to see gold soar up very violently, very volatilely over the next coming months. The trick is how to enter, when to enter, why to enter. But we know the general direction is likely going to be bullish. So right now, gold is going to be an important factor in any short, medium, or long-term investor's portfolio. So this is going to be something that's really interesting and really exciting times for gold in the future. So if you're not a gold trader, now might be a good time to dabble in it and see if you can capitalize on some of this bullish pressure that we're seeing in gold. And if you would like to use a prop firm and get some funded capital behind you, you can go ahead and use the code FISA to get 35% off a Vault Funder account today. Because gold is going to have some major bullish action, and I do not think you're in the mood to miss out on some profits. I've been Edgar Katashabe. This has been Traders Next Door, and you have just heard the Daily Scoop.